So the next 25 minutes will be about asset tokenization, but not just tokenization, also why tokenization is important for new asset classes. So what is tokenization about? And I want to start with a statement. So I truly believe that the next generation of financial assets and instrument will be operated on the blockchain. And today I'm taking a bet. I'm betting that within the next 10 years, the majority of financial instruments and assets will actually run on a blockchain. And this is usually when 80% of the audience gets lost. I mean, what is this guy talking about? What is tokenization about? New asset classes? I don't get it. A very few only ask a fundamental question: why? Why all that tokenization? Why is that relevant for new asset classes? And this is the key question, but it's only rarely asked. And this is why I'm going to spend a few minutes on explaining why tokenization is important and why I believe that the future of assets will be operated on the blockchain. That's the answer. Blockchain sales. Just kidding. But this is a very interesting example, and this is also why it's so funny to speak about that topic, because you remember 2016, 2017, all those ICOs. Blockchain sales, you just had to name your company or put blockchain in your name, and this is what happened. This is truly hilarious. So Long Island iced tea, I mean, they're doing iced tea, and they've decided at the end of 2017 to just change their name into Long Blockchain. And this is what led their share price rocket to over 500%. And guess what? Now they're not only doing iced tea, they're also doing blockchain and iced tea. Funnily enough, they got subpoenaed by the SEC, but nonetheless a very funny story. And of course, this is not what tokenization is about. So quite seriously, why I was speaking about tokenization, because it's not just about the name and the blockchain, it's about the true benefit of tokenizing assets. I know it's getting complicated, although I tried to simplify it. This is what a primary market security issuance looks like. So you have an issuer that wants to issue a security, any kind of security. And then you've got an investment bank, an agent that does the structuring of the security and also the placement. So far, so good. I think this is something which is quite well known. But then we get started. The first central securities depository, so the first CST gets involved, Clearstream, Deutsche Börse, or Börse Frankfurt. Then this is where the magic happens. The asset gets dematerialized, it gets digitized, and another custodian gets involved. This is Clearstream, Deutsche Börse Group then, for example. From there, we take it to a global custodian, where the asset then is stored, and from there on, to the bank that actually takes care of the securities accounts. And then ultimately, it somehow gets to the investor. This process usually takes 2 days, 3 days, depends on the infrastructure. As you can see, a lot of intermediaries, and it's also quite obvious, nobody of them is working for free. And the best thing about this entire picture is that every single intermediary has their own database. So basically, most of the time, all those parties being involved in this transaction start reconciling their databases. All the time they have to communicate, sorry, what is written in your database, do I have exactly the same in my database? And this is what happens all the time, and this is apparently not efficient, but this is how a security is currently being issued. What could it look like? And we're a tech company. I mean, we're tokenizing assets. Although I know about the legal constraints, but I also like to think of a world where we could just think from a technical perspective what's possible. So we still do have the issuer, and we still do have an investor that wants to get the security in their wallet. And then, theoretically, it would be completely possible to just deploy a smart contract, issue the security on the blockchain, and then have this security minted into the wallet of the investor. So theoretically, you wouldn't need any intermediary at all. But there are a few things which we're still trying to figure out, and also from a legal perspective, they are very important points. And this is why I believe, at least a little bit, that a central party, some sort of CSD makes sense. A few questions that always come up and that we're trying to answer in the process of issuing securities is, we don't want to just tokenize an asset. We want to really generate a digital entry in that registry. So exactly what Julio explained a little bit earlier. This is something we're interested in. Not just creating an underlying, but having an inherent asset running on that registry. That's the first one. But that registry, for legal purposes, has to sit somewhere, right? Somewhere. Theoretically, you could put it on a blockchain, but it needs to be regulated. Another one is kill switch. What happens, for example, if you have to suspend trading because market manipulation? Who's actually then is being allowed to pull that kill switch? I think it needs to be a governmental or financial authority doing that, a central party, though. Another one is an ERC20, apparently, is not the best choice for a security token. Why? Because it's completely fungible. It can be traded everywhere. It can be traded on decentralized exchanges. How does that work for a security? Well, not at all. So you have to make sure in some way that a token can only be transferred between whitelisted approved parties that went through a proper KYC and AML process. And where are those identities stored? In a central register. You can put them on chain, of course. But do you really want to put identities on chain? I don't think so. Another one is, what happens if you issue a share and one of the investors lost their private keys? Is the share just forever lost? Can it be recovered? What happens? I mean, in the best case, the share is entitled to dividends. The dividends are just going nowhere, and this is clearly something which cannot be in the interest either of the company or of the investor. So do we need a special a third party, a governmental party that takes care of private keys? Or do we need a function in the smart contract when this token is lost that it gets burned and reissued to a new address of that investor? All those questions cannot be covered, at least that's my opinion, by just choosing a decentralized, fully decentralized approach yet. We do have laws, and I believe that those laws absolutely make sense. I mean, we've worked for them over 1,000 years, so I think it makes sense to have them. And they need to be enforced, and this is only possible through a central authority, a special party. And this could be some sort of CSD, but still, regulators, exchanges, we as tokenizers, we're still trying to figure out the best setup. But that's something that's clearly obvious. Here it's clearly obvious what the advantages of using blockchain are. So a lot of intermediaries are still are not existing anymore. To summarize that, first of all, we do have higher security because less single point of failure, so to say, and also using a blockchain makes manipulation nearly impossible, which is a big advantage and an obvious one as well. Another one is, and that one is a no-brainer, efficiency. I mean, it took 2 days through settling, reconciliation to get that security from the issuer to the investor. With blockchain, it nearly takes, well, it just takes 1 second. There's no clearing, no settlement, no need for reconciliation. And that apparently drastically increases efficiency of the entire transaction, not only from a time perspective, but also from a money perspective. And the other one is reduce costs. Every single intermediary being involved in a transaction, of course, they want to have a cut of the share. That's quite obvious. If you get rid of them, then the costs decrease. So that's also quite obvious. And we do have lower risks. The more parties involved, the higher is the risk because you have to settle with more parties, you have to clear. This is also something that gets reduced. So this is the reason one, which is primary market. We haven't spoken about trading the security yet. But to summarize that up, on the primary market, we do have some significant benefits using blockchain or tokenization. On the secondary market, that's also simplified. How does it work? As you can see on that picture, we can get rid of the majority of intermediaries and parties being involved in a trade. I mean, yeah, do we need CSDs? Most likely. From a legal perspective, yes. Do we need them from a technical perspective? Absolutely not. And this is why efficiency on a secondary market can also be increased. Something which is interesting is theoretically, we can trade on ledger, on chain. Does it really make sense? No, because it's too slow. this entire debate about transactions per second is quite important. So with Bitcoin, you can settle and trade 7 transactions per second. With Ethereum, 20, and so on and so forth. A proper trading desk needs 10,000, 20,000, maximum of 80,000 transactions per second. And this is something which technology cannot provide nowadays. So what happens? The trading venue is trading off-chain, and reconciled with the blockchain is only if funds are withdrawn from the exchange to another private wallet. And this may change in the future. So with the technology enhancing, at some point in time it will be possible that trades are actually executed on-chain, which again then reduces dependency and also gets rid of the need for reconciliation between exchange and the ledger. But at the moment, we cannot put the entire secondary market trading on the blockchain, but that might change. So, and that brings me to an important point, to also put that in relation. Where are we at the moment? Maybe not 1994, but 1996, 97. I mean, it happens quite quickly, but this is a very good example where we are. We're still trying to figure it out. There's still major technological enhancement to be performed. But it also makes it very, very interesting. So all you sitting here in that audience, you still, well, you can consider yourself as a first mover, somebody that's interested in that technology. We're still far away from mass adoption. And I really like that comparison from a technical perspective. From a figure perspective, because I'm also a finance guy, it's a niche market. Just looking at the market capitalization of crypto assets, which is, well, a proxy for, tokenization. It's 126 billion, so that's not much, to be honest. If you just look at the market cap of all unicorns, it's 830 billion. The entire gold reserves existing are 7.7 trillion. And then the MSCI World, roughly 40 trillion. So it's a niche market, but on the other side, I also like to rather say it that way, there's a lot of potential to substitute existing assets. And if my theory becomes true, then MSCI World is something which can be completely tokenized. Not only that market, but the global market. So the potential is significant once you've standardized tokenization. So we were speaking about tokenization now. Let's speak about new asset classes, because it's not just efficiency, it's also fungibility, access to new asset classes. And why did I come up with this slogan, new asset classes? Because this is what a standard portfolio looks like. So you've got shares, you've got bonds, you've got others. Well, what others? Others is cash, just cash. So this is a very boring portfolio, but this is standard. You only get new asset classes like real estate, structured debt products, or unique products in your portfolio if you invest more than 1 million euros at your private bank. But this is what the standard portfolio looks like. And with blockchain and tokenization, something very interesting happens because I do get access to new asset classes. So on that side, you can basically see asset classes which are already existing. So they are plain vanilla. Those asset classes can already be accessed by retail investors. But it's getting more and more interesting if you look at the other asset classes. So these asset classes are asset classes which cannot easily be accessed by retail investors. And if we now start to tokenize 1 square millimeter of a real estate, or 1 pixel of art, or even just, for example, a wheel of an old-timer, then it gets accessible. And it also gets standardized through tokenization, because I've got 1 token, for example, for art, 1 for my old-timer, 1 for my square millimeter of the real estate, 1 for my diamond, for my gold, and so on and so forth. They're all standardized, and I can just put them into my portfolio. So it's not just only shares, stocks, commodities, it's everything in your portfolio, without the need to have high ticket sizes, and that's important. So the entire, not only the primary market will drastically change, the secondary market anyway, but the entire way of asset management. You have complete new opportunities to manage your portfolio in terms of diversification, correlations between asset classes, and this is something which is very important and absolutely exciting. You even can tokenize energy, and if you can tokenize it, you can also put it in your portfolio as an asset class. And this is an example I like pretty much because it's not a financial instrument, and sometimes it gets quite boring to just tokenize bonds, equities, and mezzanine, so everything between equity and debt. It's also interesting to look at other asset classes. So just think of a decentralized grid. This is a neighborhood having prosumers, consumers, and producers in that network. So your neighbor, for example, has solar energy on his roof, and he is having surplus energy and wants to sell that via smart contracts, for example. So the first step is, we have sensors everywhere. So that means we can fairly quickly and correctly measure what the amount of energy produced by that specific household is, and we can also put it on the blockchain. So that's the first step. We have to tokenize it because it's physically existing, right? It needs to come on the blockchain. That's the first way of actually tokenizing it. Well, that's the process of tokenization. So I tokenize that electricity, and then I can start trading that electricity on the blockchain. So I do have euro on ledger, I do have electricity on ledger. If I get energy from my neighbor, atomic swap basically exchanges electricity against payment. This is what happens on the decentralized grid. But then, how does it become an asset class? We have to exchange it somehow. Our world still works with euro. We're not completely on the blockchain. That means I somehow have to tokenize that kilowatt hour and put a price tag on it. That means we're dependent on exchanges. We need some gateways into the decentralized world, and this is something that it could be. And of course, then a fiat money system. So this is basically it. That's very simply speaking the process of tokenization. I do have a physical source, which I tokenize through measuring it and then putting it on the blockchain, and I start trading that asset on the blockchain. But I always do have the gateway to the real world because it still operates with fiat money. I'm well aware that we do have a lot of Ethereum guys in the audience. And a fundamental question is, which protocol do we use for tokenization? And that's a very good one. Just looking at the stats, the facts, most of the TGEs, token generation events in the last couple of years took place with Ethereum because it's convenient. It makes sense. The standard is excellent. The documentation is fantastic. We do have others, custom platforms, Hedera Hashgraph, EOS, so something that they came up with. But the majority for tokenization or the platform, state of the art at the moment, is Ethereum. So that's something I think which is important to mention. And this brings me to my vision. So what does the future looks like of securities? Not only securities, but also assets. Let's think about different libraries or drawers, if you want to name it. So we do have an entire universe. So we do have equity, mezzanine, debt, real estate, commodities, even intellectual property rights, or even your old-timer, even energy. And for every single asset class, we develop a smart contract, which from a legal perspective represents that asset, and also has the functionality that's attached to that asset from a technical perspective. And because Ethereum is one platform which is broadly used, we're doing it on Ethereum. But let's just assume for a little moment that Ethereum may one day become obsolete or replaced by another platform. So something that we're heavily discussing with all our clients is, what happens if Ethereum is not the standard in 10 years, and we have now issued our securities on Ethereum? That's a very good question. So we have to come up with some sort of middle layer, some exchange protocol layer, where we can easily swap an asset being issued on Ethereum, for example, to Corda. This is just, it can be Hyperledger, Fabric, it can be EOS, it can be any platform. But somehow, if you now structure and program a security, you have to think about the opportunity to swap it at someday. Do you enforce that already or include that already in the smart contract? Will that be happening through a custodian and taking care of the old coins or securities and issuing a new one? So I truly believe you can start with Ethereum, but it's probably good to be agnostic and have a middleware and an approach which allows also tokenizing and swapping assets on other platforms. And the good thing is, if, for example, if you want to use Corda in Ethereum, you just have to make sure that the smart contract, which is deployed on Ethereum, is similar on Corda, and then you need mechanisms which actually allow the swap between both platforms. And this is something which is really important, not just issuing the security, making it available in secondary market, but also thinking about what will the future look like of platforms. I mean, we already have a war of platforms. Everybody that's attached to one platform apparently tells this is the platform that will survive. EOS is the best platform. IOTA is the best. Hedera, Hashgraph, Ethereum, Corda, Hyperledger. Well, I don't know. They all have pros and cons. And I'm pretty sure that, in the next 10 years, we do have a few platforms which will be used for different use cases. You just have to make sure that you can interact and swap between them. And that brings me also to my conclusion. And I'm really excited about 2019. And some predictions, some things I believe will happen in 2019. First of all, it will be the year of tokenized securities. And that's long overdue. So the best thing that probably could happen for the market is that the entire ICO market collapsed. Because now we can start from new and rebuild it, but properly. So the first one is, I mean, we're doing education for three years now. People finally start to understand what blockchain is. So that's something. They still not understand, in most cases, when do I need a private ledger, when do I need a public ledger. But they get engaged and they start to grasp the idea of what tokenization can do and why it's important, and also what the benefits of blockchain are. So that's good, but just the first step. The second one is regulation. So yeah, sometimes it really buzzes me because it can be quite difficult dealing with the regulators. They may slow you down. But on the other side, I'm also noticing that they're trying. So Thomas was a very good example about how regulation can embrace technology. And this is something that happens not only in Liechtenstein, but also in Germany. So they do work together with blockchain companies. They're trying to understand it. And they're trying to set a framework which allows actually things like tokenization in a proactive way, which is good. This did not necessarily happen in the last couple of years. But now this is something that is really happening. The third one is ecosystem. Funnily enough, if I issue a security token now, there are only limited opportunities to list that token. So the entire ecosystem is just starting to exist. We do have custodians, professional custodians, and by the way, that's important. Assets being issued on the blockchain cannot be stored centrally. It's just the central storage of private keys, but the asset sits on the blockchain and hence is distributed. But the ecosystem is evolving. So we do have Bank Frick, for example, that does crypto custody von Tobel, State Street. We do have exchanges, Börse Stuttgart, MDX, Lücke, that start opening up for secondary market trading for security tokens. So this is important. It's still not existing, but this helps the industry growing. And then something that also has changed is it's not just I copy and paste my white paper, get a standard ERC20 deployed within 2 hours, and then I collect 20, 30, 50, even 100 million. This is something which completely stopped, and that's excellent. And now we do have partners from investment banking, from mergers and acquisitions, boutiques, professional players entering the market and helping them actually to change the entire way such transactions are set up and executed, and that's great. Last but not least, it's not always the financial institutions, our clients, that want to change, but the good thing is they have to, because their clients, institutional investors, they do have an appetite and demand for digital assets, for crypto assets and for tokens. And they are basically pulling it, the entire industry. They force their partners to change and innovate, and that's fantastic. So slowly but steady, we're changing, and 2019 will be absolutely fantastic. I'm looking forward to see what's happening. Thanks.